excited? Yes. Are you guys excited to talk about taxes? Yes. Let me see a show of hands. Who's excited to talk about taxes? All right, good. That makes me feel good. Are you guys ready for the new tax law? No. No? Well, my goal is to get you ready. Would that be okay? Yeah. All right, that's what's going to happen today. I'm going to be talking to you guys about how to write off almost anything. What did I say I was going to talk to you guys about today? Anything. I didn't say everything. So I don't want anybody calling my office saying, Karla said I can write off everything. I said almost anything, okay? That's the first thing we got to get clear. Are you guys with me on that? Yeah. All right. There was a major tax law change, and I am going to tell you, for everybody sitting in this room, if you have not prepared for this major tax law change, I am sitting here to tell you that you guys are going to owe a tremendous amount in tax. I was just featured on KTLA News. They brought me in to talk about the General Accounting Office has warned Internal Revenue Service that the majority of taxpayers are going to owe tax contrary to popular belief. So I am going to tell you, if you have a tax plan, you need to, and I will show you why this afternoon. So you guys ready to go? Yeah. All right, let's hit it. What I have found, there's two types of taxpayers. Does anybody know what those taxpayers are?
Delayed and prompt.
They're what?
Delayed and prompt.
Okay.
Filer and non-filer.
The filer and the non-filer? That's two types of taxpayers. I agree with that. Anybody else? W-2 to 99 taxpayers? Yes. But let me tell you what I see. In my office, I see ultra-aggressive taxpayers. People that come to me and say, Karla, I want to write off everything. What did I tell you guys when we started? I said almost anything, right? I didn't say everything. Those are the ultra-aggressive taxpayers. Where do you think they end up? In jail without Karla's phone number. If you guys go to jail, don't call me, okay? I just want to be clear. I see ultra-aggressive taxpayers, and then I see ultra-conservative taxpayers. My ultra-conservative taxpayers are my taxpayers who don't want to take their deductions. They're the ones that say, Karla, I don't want to raise any red flags with IRS. I don't want to get in trouble with the government. It's okay if I don't deduct my mileage. It's okay if I don't write off my kids. It's okay if I drop my spouse off my tax return. Is it okay not to take your deductions? No. It's never okay not to take your deductions. But my question for you is, what type of taxpayer should you be?
Middle of the road.
Middle of the road? You're driving down the freeway, and there's 5 lanes. Are you going to drive in the middle of the road? I don't know.
No, I'm driving 3.
You're driving all 3 roads? What else? Anybody else? What? An informed taxpayer. What's your name? Tammy said an informed taxpayer. Anybody else? An honest taxpayer. I like that. An honest. Did somebody say no? Oh no. Who said no? You gotta leave. We only want honest taxpayers. That's exactly what we want. And so how do you become an honest taxpayer? Do you guys remember Dorothy from The Wizard of Oz? She just wanted to click her heels and get back home, right? And follow the yellow brick road. I love that. So an honest taxpayer is a taxpayer that follows the law, follows the code. And I just want it to be known that Karla Dennis said, you all need to be honest taxpayers. There's no reason to be dishonest. There's no reason to cheat on your taxes. There's no reason to overstate your expenses. There's no reason to underreport your income. All we need to do is follow the code. But the key is the majority of us don't even know what the code is, right? We know the DMV code. We know we're supposed to stop on red, go on green, and what do we do on yellow? Caution. We hit the pedal and speed up. That's exactly what we do on yellow, right? So we need to understand how to follow the law. So I am going to give you guys 4 simple steps to following the code and to write off almost anything. Would that be okay with you guys? All right, this is where you take notes because this is really important. And I am going to tell you with the new law. They supposedly told us they cut tax, right? That's what they told us. If the government is going to be without money, on the one hand, they're going to increase audits on the other hand. So you've been warned here today by Karla Dennis. Audits will increase. I've been in this business a long time, and I know what's going to happen. So I am going to give you 4 simple steps on how to follow the code and reduce your tax bill. Who wants to do that? All right. The people who didn't raise your hand, what do you want to do? Increase your tax bill? All right, let's go. First, step number 1, you must have a business. And I cannot express this enough. The tax code has been written for people who have businesses. The people who make the laws, the people who champion the laws, the people that sign the laws into being, the people that are in Congress, the House, and the Senate, these people have businesses. So I am going to tell you that 98% of the tax code is geared toward business owners. So how many of you in here own property? All right. How many of you in here are business owners? Why is there a less number of hands going up? If you own property, you're in business. You're in the real estate business. You are real estate investors. So I'm going to ask that question again. How many of you guys are in business? That should be all of you. And if you're not in business, get in business. If you have a hobby, get yourself a side gig. If you drive Uber, I don't care what it is you do, you need to get a business and you need to invest time in that business. You need to get a mentor. You guys are here today learning, mentorship, education, and you guys need to have a business plan and strategy. So what did I say number 1 was? You gotta get a business, because I'm telling you, the business owners are going to reduce their tax bill. Now, you can be a W-2 wage earner and a business owner, but I need you to be both. Are you guys following me? All right, step number 2. Your business expenses must have a business purpose. They must have a business purpose. And this is where people struggle a lot of time trying to figure out what's a business write-off. I get this question all the time. Karla, how do I know it's a business write-off? How many of you struggle with that sometimes? Knowing that something's a business write-off. How many of you are willing to admit you struggle with it? All right, now more hands are going up. There are some things we know are write-offs, like our mileage, our cell phones, and things like that, right? But there are some things that could potentially be write-offs that we're paying for every day that we can take a tax deduction on, but we just don't know it could be a write-off. That's what ends up happening. So what you need to understand is, how do you know if your expenses can be linked to a business purpose? How do you know? Necessary and what? Ordinary and necessary? You've been listening to me, huh? Ordinary and necessary. That's one component of it. But I created a system, because I get this question so many times. I created a system, and it's called my TDWOW framework. TDWOW stands for Tax Deductions Without Worries. And literally, if you walk through this framework, you're going to know with certainty whether or not your deduction, your expense, is a tax deduction. This is what IRS uses, and this is the benchmark. You got to walk through what we learned in kindergarten. What are we trying to write off? Who is it going to benefit? When are we going to use it? Where are we going to use it? Why are we going to use it? How are we going to use it? If you can define that, it becomes a write-off. And you got to link it to the pursuit of income. And this is how you're going to get your tax deductions. This is very, very important. If you cannot do this, your tax deductions are going to be disallowed on an audit. So I'm going to tell you, I've created that framework. I will also show you, I have my tax deduction strategy program. The framework is in here for anybody that wants to come to my booth. Check it out, look at it. It's completely up to you. But education is powerful. And those people who are able to reduce their tax bills have knowledge. It's not happening on, by luck. It's happening strategically on purpose. You guys with me on that? All right. That was the second step. The third step is you have to have proof of payment. A lot of you guys think, oh, you know, as long as I use my credit card and swipe it on my American Express or my Visa and I throw the receipt away, I'm good. No. You need proof of payment. Proof of payment requires a canceled check and a receipt. And the government is really cracking down on that. They are not just going to go by your credit card statement. The auditor can disallow that if you only have your credit card or you only have your canceled check. That's very important. So you need to have both. Why do you want to have both? Anybody? The receipt will show that the canceled check is appropriate. Anybody else? Bob? Alan? Anybody? We're going to stay away from cash, Bob. That's a whole other subject. The receipt is itemized, right? Do you think that Apple keeps their receipts for their credit card statements? Do you think that Google does that? Do you think that big companies do that? The tax code is for businesses. So every business needs to operate the same. It doesn't matter the dollar amount, right? So if you are serious about your business, you're going to keep track of both. I guarantee you keep track of the rents your tenants pay and the leases. You keep track of that, right? You got to keep track of both because serious business owners track their expenses. Are you guys with me? So it's sort of like, I'm a football mom. I love football. I don't know anything about baseball, but I know a lot about football. So if my sons are going to suit up for football, they got to come to the football game with their football gear on, their cleats, their helmet, everything. They can't come without the helmet because they can't play. In order to play this tax game, you got to have the receipt and the canceled check or the credit card statement. Are you guys with me? And we want to do it right. We don't want to give IRS a reason to disallow our deductions. We don't want to give the coach a reason for me not to play. Because I think actually I could be good. I've done this for I've been a football mom for 20 years. I know I could be good at that. So, are you guys with me? So what did I say number 3 was? Proof of payments. Very important. The 4th step is make sure that your expenses are properly reported on your tax return. Now this is an area that I'm going to tell you that I see a lot of chaos. Your expenses are not put in the proper categories. I have seen expenses on the tax return that says Visa payments, American Express payments, office expense. Can anybody define office expense for me?
Anything the office, it could be from internet, it could be
anything you use for the office, like internet. So internet is internet, right? Paper is office supplies, right? Stay away from office expenses, that lump category. That is a flag for an audit category. Proper categories. It needs to make sense. Do not give the IRS a reason to question what is going on. Does that make sense to you guys? You don't want to do that. So as clear and concise as you can be, you're going to eliminate them asking you questions. How many of you want IRS asking you questions? No. All right, nobody, right? So be clear and concise. Don't put miscellaneous on your tax return. What's miscellaneous? You said you don't know how to categorize, right? That's where you're going to see me at my booth at 428. I'm going to help you categorize. Categories are important because I'm telling you that's one way IRS will flag an audit. I deal with audits all the time, and when I look at the tax returns, I can identify why they got into an audit. And I represent clients that come from other CPA offices, not my office in particular. Are you guys with me? All right, so proper categorization, very key. So what did I say number 4 was? Proper categories. All right, let me tell you some of the most common headaches I see. The one thing that I see consistently is not keeping proper records. Guys, we got to get out of that hole. We're going to put the, we're going to get the receipt. It's going to be in the car. It's going to be down in our purse. We're going to find it on April 15th. I think I know where it is. I put it in my drawer. Wait, where is it? How many of us do that? Okay, there's only 3 of you. Raise your hands, really. A lot of us do it, right? It's in the kitchen. It's in the kitchen drawer. It's in the shoebox. Oh, I thought my husband had it. The dog ate it, right? All right. We got to keep proper receipts, and Our record keeping cannot be muddled. Our record keeping needs to be really, really clear. And when I say clear, I want that record keeping locked down so clearly that IRS does not question it. So for example, if you have rental property and you're depositing all of your rents into your personal bank account, how is IRS going to decipher rental income from personal income? They're not. It's all commingled. So don't give them a reason to question it. Do not commingle receipts. Very important. Also, the outdated shoebox. Let me tell you guys a story. I had a client that came to my office one time and he said, Karla, he wanted us to handle his tax return, his bookkeeping, and he walks in and he says, Karla, do you have a dolly? I said, a dolly? He goes, yeah. He goes, I have all these boxes in my car. And Karla usually doesn't sweat, but I like broke out a sweat when he said that. He literally wanted a dolly and he brought in 12 boxes of receipts. Now, did we handle that for that client? Yes, we did. But I will say to you, if you're not tracking your receipts, how do you know really where you are financially? How do you really know if your receipts are all mumble jumbled in a box? It's not enough just to keep track of your income. You got to keep track of your expenses too. That's very important, Alan, Sylvia, Fred, very important. Chuck, got it? Nancy, you good? Irene? Don't be trying to hide, Lucy. All right? Let's make sure we do that. Let's make sure we keep track of those expenses and get that unmuddled. There's so many apps that you guys can put on your phones. How many of you guys have cell phones? All right? The rest of you still going to the 25% pay phones? Right? We all got cell phones. So let's make sure, get some type of app on your cell phone. You can take pictures of your receipts and it'll load up. Receipt Bank, write that down. That's a real easy one for you to use. Receipt Bank. Very good to track your receipts. You guys with me? All right, so let's move forward. I have a question for yourselves. Why do the wealthy stay wealthy? Why is it that some people pay tax and other people don't? Uh-oh. Whoa, Sylvia said because they cheat. There may be some people cheating, but how do you guys think the majority of the people are able to lower their taxes? By taking advantage of every deduction. What type of deductions? All the deductions. Where are the deductions? They're in the tax code, right? They're taking advantage of the deductions in the tax code. I will tell you that the majority of people who do not pay income tax, they're doing it legally. They're using a tax code. They're using a tax code to their advantage. It's the law. So my question becomes, if it's the law, why are only those people following that law? Why is it the rest of us are not following that law? Does anybody have an answer to that? Heidi? Zuli? Anybody? Some people don't take the time to study and understand. Okay. Most people don't want to understand the 86,000 pages of the tax code. Karla's a freak, so she loves doing that type of stuff. All right? So most people don't do that, right? But let me tell you what happens. All of these wealthy companies and wealthy individuals, you know what they do? Number one, they get organized and they put together a strategic tax plan. Before I owned my own business, I used to work in a tax law firm. And it really opened my eyes that a lot of these high net worth individuals hire these professionals to use the tax code, every ounce of it legally, to reduce their tax bill. And it just really baffled me. I then decided, you know what, I need to get that knowledge. So I went back to school, got my master's in tax law to get that sorted. And then Karla read the tax code, and then Karla got it figured out so that she could educate her clients so they can reduce their tax bill. Now, I'm not going to say you're going to zero out, but what I will say to you is that if you use the code and you strategize, you can drop your tax bill. But it's up to you whether you want to do that or not, right? because that's going to require just a little bit of energy that maybe you don't quite understand how to utilize yet. So I'm going to walk you through what a strategy looks like. And this is truly how you can keep more money in your pocket. So I have a question. How many people want to give Uncle Sam more money? Nobody raised their hands, right? You want to give Uncle Sam more money?
I want to make more money to give him more money.
Oh, Nancy's at another level. Nancy says she wants to make more money to give more money. You know what, Nancy? I said I wanted my estimated tax payments to be $1 million. Because if they're $1 million, Karla must be making $1 bazillion on the other end, right? But I probably wouldn't even give $1 million away, all right? So the key is no one in here raised their hand that they want to give Uncle Sam more tax. How many of you want to cut your tax bill? All right, right? And how many of you want to do it legally? The rest of you want to do it how? Illegally? Because we're not doing anything illegally. All right, so I'm going to tell you how to make this happen. There are 7 prongs to strategic tax planning. And this is truly the key. When I worked at the law firm, this is how it worked. It hasn't changed. The tax laws may change, and they may get adjusted. But the strategy and how we go about lowering your tax bill, this is the recipe to make it happen. So I'm going to walk you guys through it. Are you guys ready for this? How many people are ready for this? All right. The very first thing is you got to get organized. And I'm going to tell you to get organized using the TD-WOW system. And the reason why I said that is because I put that system together based on the questions that my clients are always repetitively asking me over and over and over again, and based on what I see when I go in, I represent a client in an audit, and I see the types of questions that auditors ask. So now I said, you know what? I need to create something that the average taxpayer could utilize and feel confident that when they put those tax deductions on their return, if ever Uncle Sam knocked on their door, and we hope he doesn't, right? But if he does, I want you guys to be confident that your tax deductions are going to stick. Does that make sense? All right. So number 1, you got to get organized. That's the very first thing that needs to happen. Step number 2, the very first thing you need to do is have somebody review your past tax return. Now, I'm going to use this analogy with you. Let's say that you go to the doctor, and this actually recently happened. My son, I have 4 wonderful sons. I'm a blessed mother. My 3rd son recently had a shoulder injury, plays college football. And so when we went to the doctor to get a second opinion, the very first thing the doctor did is he asked about his past history. He said, has he ever had a shoulder injury before? What has happened? I want to look at past MRIs, past x-rays. Did that make sense to you guys, that he would ask that question? All right. So if you're going to do strategy, does it make sense that I'm going to look at past year's tax returns? Right? Some of you guys don't even want me to look at those past year's tax returns. You're like, no, Karla, no, I need to look at it. Are you guys with me? I need to see what has happened in the past. There's no judgment, but in order for me to help you in the future, I got to understand your past situation. You guys with me on that? All right. The very next thing that the doctor did, he started moving my son's shoulder around, and Mama got nauseated. I'm not going to lie. He was moving the shoulder back and forth, and assessing his current situation. Wanted to see just exactly what was going on with him. So he did a clinical analysis of my son, and then he gave my son another MRI to see exactly where my son was and his current situation. So if I'm going to do strategy for you, the very first thing I need to do is see where you are right today. We are in October. We're getting ready to close 10 months of the year. So it's important for me to forecast where you are for 10 months and annualize where you may go for the next 12, for the next 2. Does that make sense? I need to know that. Whether it's a good number or a bad number, I need to know that number because that's the starting point of me being able to help you. How many of you guys know where that number is right now, where your tax forecast is for 2018? Okay, a few of you. I'm going to tell you to know that number. That's a very important number to know. Not just how much money you make, but how much tax you might have to pay. We want to assess the current situation. Make sense so far? All right. Now, once I assess the current situation, the doctor said to my son, he says, okay, now that I've examined you, did an MRI, you have a torn tendon, all sorts of stuff was going on. I was getting dizzy. Had all kind of injuries happening. But once he did that, he asked my son, what's your vision moving forward? Do you want to try to finish playing college football? Do you want to go to the NFL? What is your goal? He didn't ask mama, because I would have said the goal is to quit right now, right? But he asked him that. He wanted to know what my son wanted to do next. Because depending on what my son's vision was for his football was going to determine what methodology he used to help my son. Does that make sense? So of course my son said, I want to play football forever. And he's 21 now. He thinks he can make his own decisions, but not so really, because mama's still in charge, right? We opted to go for surgery versus rehab. But that was based on my son wanting to get back out there on that field in the next 4 months. What I mean when I say understand your vision, each one of you in this room has a vision that you guys are trying to accomplish. Olga, Christine, Nancy, all of you guys have a goal. Is that right? Do you guys have goals in here? Right? Okay, so it's important, it's extremely important that I understand your goals. Does anybody know why it's important to understand your goals? Fred, do you know why? Anybody? What'd you say? Otherwise, I wouldn't be able to do the correct strategies. Chuck, I'm liking you. I'm really liking you, Chuck. You guys are on fire right here. That's right. I got to understand your vision. What are you trying to accomplish? And that vision could be things like, well, you know, Karla, I'm trying to buy some more property. Karla, I'm trying to get out of debt. Karla, I need to send my child to college. Karla, I'm trying to get divorced from my husband. Karla, I'm trying to run away. It could be all sorts of things. Maybe you got an elderly parent that's coming to live with you. Maybe you're trying to retire. Maybe you're trying to leg up, sell a property, do a 1031 and buy some more property. I don't know what your vision is, but it's going to be real important for me to understand it. And you got to be willing to talk to me, right? You got to be willing to have that conversation. And sometimes that conversation is uncomfortable. But I'm going to tell you that if you can't have a conversation with your tax person, girl, like we having this conversation right now, probably not the right tax person. I tell all of my clients that I really want to break bread with you. Across the street from my office is a Marie Callender's. It's pumpkin pie time. So anybody come to my office, please stop and get a pumpkin pie. I don't need any whipped cream. But as long as you get that pumpkin pie, Karla's going to be real happy. All right? But that's the level of relationship you want to have with your tax person. You got to be comfortable enough to have the conversations with them. And if you are holding back on those conversations, I guarantee you they're not going to be able to help you. Does that make sense? And you need to be having those conversations sooner rather than later. Once I understand your vision, then I can implement the right strategies. And the right strategies as they pertain to you. Not the right strategies as they pertain to your best friend or as they pertain to your neighbor or the strategies that you guys Google. Honestly, how many people think Google's authority? How many of you are willing to admit that you think Google's authority, right? We are Googling answers that are getting us in trouble. Google is not authority. I don't know what Google is, to be honest with you. I think Google just gives us a point of reference, but I think each and every one of you deserves the right answer for your unique situation. I would hate if the doctor was Googling on how to fix my son's shoulder. I think I would have passed out. And I went for the second opinion because the first doctor said, well, Miss Dennis, I think I kind of might be able to fix it. I said, what? You think you kind of might? How about you do that on the next patient, but not on my son? We're going to go locate the expert. And we literally flew to Colorado to find the expert. Because I believe in expertise. Because I believe that my son deserves the right scenario for his situation. How many of you guys believe you deserve the right scenario for your situation, right? All right, that's true. You got to want that for yourselves. All right. Once we implement the right strategies, and those are the strategies that pertain to you. Unique is your DNA. Once we do that, then the very next thing is we have to continue the conversation. That means that you should be having conversations with your tax person how many times a year? What did you say, Olga? Olga said as many as necessary. I like you, Olga. As many as necessary. But a minimum of at least 4 times a year. At least 4 times a year. And you guys look puzzled when I say that. You're probably like, Karla, what are we going to talk about 4 times a year? We're going to talk about you and your financial situation. So let me tell you, we have a joke in the tax industry that if you're coming to see us between January and about February, you're kind of walking in the emergency room and checking yourself in, right? The emergency room. If you're coming in sometime between February and March, you probably got somebody to get you a wheelchair to roll you in because you're shaky, right? If you're coming in sometime between about the end of March and April, you're coming by way of ambulance. All right? And if you come see me April 15, you come in medevac. You know, with the whole helicopter thing going on. The key is talk to your tax person before year end. Because I'm going to tell you, if you do that, you will get a lower tax bill. They will be able to answer your questions and spend some time with you. They can get to know you. They can understand your vision. They can implement the right strategies. But if you come into them for the very first time and you got an hour appointment and you need to tell them all of these things, what do you think you're going to get? Anybody? A what? A what? You're going to get a high bill, all right. What else you going to get? That's going to be the least of your problems. What else you going to get? You're going to get a hot mess. That's what you're going to get. You might get a tax return that's right. It might not be right. Because you didn't give them an opportunity to really review your past, assess your current situation, understand your vision, right? Implement the right strategies for you. I had a client come to me, a real estate investor that I met here. They came to me for the very first time, and we met probably around this time of the year. And I'm going over their tax return because I wanted to review the past. The client told me that they had 13 pieces of property. But when I reviewed their tax return, I only saw 11 pieces of property on the tax return. So I asked the client, did you sell 2 pieces of property? She said, no, Karla, I have 13 pieces of property. I said, well, there's only 11 showing on your tax return. Because the last tax person, some kind of way, missed 2 of her properties. You follow me? And she doesn't really know how to read a tax return, right? We're the professionals, we're the licensed individuals, we're dependent on you. I was dependent on that doctor to do my son's surgery correctly. But you can best believe I was asking him a million questions. He was probably so glad I left. Honestly, they were probably like, please get those people out of here. Because I asked 1,000 questions. And that's what you guys should do, ask questions. But if you're working with somebody that understands and takes the time to really review your situation, you won't get yourself in that situation, right? All right, very, very important that you guys understand that. You got to continue the conversation all year long, at least 4 times a year. Touch base. I don't know anybody's life who, when we started this year in January 2018, that maybe haven't had some changes by October 2018. And if you haven't, I want to meet you and see what you're doing. Because I had all sorts of changes. Life changes. Things happen. We get more rentals. We make more income. We make less income. We're retiring. We're pulling money from our retirement accounts. We're doing 1031 exchanges. We're getting married. We're having babies. We're getting divorced. Who knows what we're doing? But as life changes, your tax scenario needs to be changing. That needs to be at the top of your list. Because as money's in motion, it's going to eventually land on your tax return, right? So why not be proactive versus reactive? It's a mind shift. We've been taught to gather all of our data and go see our tax person sometime between January and April, right? That's the way we've been taught, and that's fine, but I want to teach you guys a little bit different. I want to teach you what the wealthy people do. They're not seeing their tax people January through April. They're seeing them all year long. And they're making sure that they're not leaving Uncle Sam a tip. And they're doing it legally, and they're using the tax code, the Internal Revenue Code, all 86,000 pages of it. And since it's changed, it's probably more pages than that. Are you guys following me? Very important. So do I expect you guys to understand the tax code? No. I don't expect you to understand the tax code, but I expect you to be knowledgeable enough to ask your tax person, where is that in the tax code? Throw that question on them. I love that, right? Where is that in the tax code? All right, very, very important. So I am going to, I have, I think, a few more minutes. I am going to open it up for a couple of questions if anybody has a question for me. Yes. Yep. Yes. Okay, I started off saying there's a change in the tax law, and I did explain it. So let me recap that for you. That's a great question. So let me highlight the major changes in the tax code. Change number one, the exemption for yourself, the $4,050 you normally get for yourself, your kids, and your spouse, gone. That's the first change in the tax code. Second major change in the tax code is the fact that the state and local income tax is limited now to $10,000. That's another major change in the tax code. Huge. The miscellaneous itemized deductions, union dues for our first responders, and uniforms, investment fees, tax prep fees, gone. That's another change in the tax code. It's a lot of changes in the tax code. We would be here for a whole nother seminar. But what I am going to tell you, if you don't plan, you're going to be blindsided. Because there are some significant changes that are impacting people. The other thing I will say, one of the items in the tax code is about this new 20% business deduction, right, off income. Well, I'm here to tell you that that's not going to happen unless you take some action. It's not a straight 20%. There's a catch to that also. Are you guys with me? So the key takeaway is, come to my booth, learn about the TD Wow system. It's based on the new tax laws. I put together a whole program for you guys to understand the new tax laws because you're going to get blindsided. So I took the time over the summer when the law came out. Believe it or not, I was up until they put that law up, and I printed all the pages and I read it. All of it. And when I tell you it's not what it seems, it's not what's being depicted on TV, it's not. Most Americans are really going to get utterly and completely blindsided. The program that I told you guys about, I'll show it to you again, is out there on the table. Check it out. See if it's something that you're interested in. I am going to tell you it is going to help you. I simplified it so that you can understand it because it's very complex. I have tax accountants, CPAs calling my office every day, asking me, Karla, can you help me with the new tax code? Because that is how complex it is now. Very, very important. Are you guys still with me? All right. Do you guys have my 10 Commandment cards? Did we pass those out? All right. So now, when you guys stop by my booth, and before you actually do that, I want to do a couple of things, tell you guys a couple of things. So, When this seminar is over, a lot of you are going to come up to me and want to ask me a lot of questions. And I want to be able to answer those questions for you. But one thing that I want to tell you that I brought with me today about 6 of my tax strategies. And you may think that my tax strategists know less than me. But I don't believe in hiring down. I believe in hiring up. Because I don't want to be the smartest person in the room anymore. Does that make sense? So I have with me today at my booth tax strategists that can answer your question. So I think that we may have a couple in the room. We have Elizabeth sitting up front here. She is one. We have Kenneth over here. Kenneth is one. We have Zachary in the back. Do we have Andrew and Carlton in the room? They're where? Okay, we have Andrew and Carlton at the booth. They're licensed tax professionals. I handpicked them. They didn't pick me. And I picked them through rigor to make sure they knew what they needed to know to serve you. Are you guys with me on that? Very important. Because the tax person needs to know what they're doing. And I don't take that lightly. All right. So do you guys all have our 10 Commandment cards? No? Ellie, can you help them with the 10 Commandment cards, please? Yes. Here's Zachary. Can you pass them out, please? Yes. I can't walk that far because I'm a big. AMT tax was reduced a little bit, but AMT is still in the tax code. It was reduced, the limits were increased, but chances are you're probably still going to get hit with AMT. Yes. Did you have a question? Did you have a question? Can an audit require you to produce photographs of the improvement of your property? Yes. But I will tell you guys something about audits. Let me tell you something about audits. Audits are not always about your tax deductions. Whether you have the receipts or documentation sometimes, audits are about issues on the return. And it's an art to represent in an audit. I tell all taxpayers, do not represent yourself in an audit. That is just something I would never recommend. Whether you hire me or anyone else, that is an art form, and the government, the IRS at least, they're a collection agency. So that is their job, to collect tax for our government, to collect revenue. So I would say to you, if you're in an audit, get some representation. Because they will ask you for things and you won't know whether you should give it to them or not. They have the right to ask, but is it legal for you to be able, for them to be able to ask you that? Maybe, maybe not. But I'm sorry about that. But that is a legal question though, right? Sometimes auditors ask things that they shouldn't ask. But you're not going to know that unless you understand audits. Very important. Do not represent yourselves in an audit, I'm telling you. That's shooting yourselves in the foot.
How can I deduct the replacement item in an apartment? I approve an apartment more than $2,500. Section 1179 doesn't deduct it. How can I get around that?
So John is asking, how can he deduct stuff on his apartment? He says Section 179 will not let him get around that. The new tax law has humongous bonus depreciation in it. You can deduct a lot of stuff. If you guys own apartment buildings, you all should be doing cost segregation studies. All of you. It is the key to drop your taxes fast. It is really a key, and that's something else that we could talk about. There's so many different strategies that you guys can employ. Cost segregation study. Okay, everybody have a 10 Commandment card? All right, we ready? All right, these are Karla's 10 Commandments, and this is something that I live by, and I want my clients to live by, and I want you guys to repeat after me. Okay, you guys ready? All right. Thou shalt not fear IRS. I can't hear you. All right, help me out here. Thou shalt always have a strategic tax plan. You guys sound like you guys just woke up. Let's bring the heat. Thou shalt always have a strategic tax plan. Thou shalt always turn a passion into a business. Whatever you like, your hobby, turn it into a business. Thou shalt always file their taxes on time. Thou shalt always file their taxes on time. Thou shalt always use a tax professional. Stop doing your taxes yourself. Thou shalt take time to be organized. Always take time to be organized. Thou shalt use investments as a tax deduction. Thou shalt be a strategic spender. Thou shalt always be prepared for an audit. Thou shalt call 1-800-878-4051 for the right tax answers. I am Karla Dennis. It has been my pleasure to speak before you guys today. Fill out your consultation cards. Meet me at my booth. I would love to help you guys lower your tax bill. It's been my pleasure and honor to be here with you guys today.